presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You got great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the May 15th terrific Thursday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, morning anchor here at TFNN.com and author of Mastering Probability, the daily newsletter service that is the intelligence for creating your financial freedom. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. My outcome, as always, especially this evening, is to teach you how to master the tools for trading, and that includes the tools of the mind, because when you and I, when we master the tools of the mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD, or swing points, or Gartley patterns, or various candlestick signals that the bulls and the bears, the sign makers of the markets, are making. We'll talk about things like evening stars, hammers, bullish and bearish candles. And each of these signals or patterns are what I call tactical tools or market tactics. But the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. What I call mastering probabilities. And that's where I come in, because strategists will slay the tactician all day long. Now, the foundation of any strategy is a strong mind. So let's look at one of our tools that help us think like a strategist, the tool I call perseverance. Makes the difference between success and defeat. True story. A despondent man who had lost his job and completed several dozen interviews without finding new employment was given the advice to continue looking forward to his next interview. In amazement, he questioned that advice, saying, "Why? Why try again?" The reply was simple. Because with each and every rejection, he was moving a step closer to the job that was waiting for him. Picture an outcome that's so strong that you want, that's resting at the summit of a steep and slippery mountain. Next, imagine a heavy stone placed upon your back just before you begin to climb. How do you feel the higher you climb? Excited? Tired? Frustrated? Look, if you fail to reach your outcome the first time, or even the second, the third, the fourth, what is it that's going to keep you going? Yes, folks, it's perseverance, because perseverance makes the difference between success and defeat. Perseverance is that voice within you saying, if at first you don't succeed, try again. Folks, never give up. Never, ever, ever give it up. It is Terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. We had the Dow closed down 167 points, finished out the session at 16,447. S&P down about 18 points, closing out at 1870 and change. NASDAQ composite off 31 points, trading out, closed out at 4,069. A bit of a comeback in the Russell 2000 during the session out here. In fact, it was the leader on the way down. It was down the least, percentage-wise, off about 0.6%. Well, certainly, we're going to start off taking a look at the IWM, the Russell 2000. Apple was off $5 today. Microsoft down 1.5% off 64 cents. Google off $6 out there. Leading the charge, the upside was VIP Shop Holdings, Intercept Pharmaceuticals, Clovis Oncology. Price-wise, that was up $14, $11, and $8, respectively. To the downside, Priceline down about $10. Alliant Tech Systems off 14, CF Industry Holdings down 9. So let's begin our day. Let's take a look at the IWM. Let's take a look at we want to look at the weak link. We want to understand what's going on in the market. And boy, there are messages. So fasten your seatbelts out here, because we've got a lot to cover for you. A lot of messages, a lot of clear messages that the markets are giving to us. So what did the IWM do today? Number one, if you take a look at the candle form, well, it was testing two swing points that it rejected, by the way. Volume in the IWM on the way down, 70 million shares today. Now, 70 million shares were going against 76 million shares from April 15th. going against the swing point from February 5th that had 60 million shares. So it moved in, and it's the second time that the IWM has moved into that February 5th swing point recently with volume. What does that say? It says that the work to the downside is not done. Maybe it's done just for the moment, but it is not done. It will be back down there to that February 5th low. Hasn't been able to punch through there. There are buyers that are waiting out there. In fact, we saw them when it came to the IWM, because what type of candle did it form today? Yes, it formed a hammer candle. Sort of. Why do I say sort of? Technically, it's a hammer candle. But what the IWM did today was it gapped down. If you take a look at yesterday's close, what's so important, with such a little nuance, to really understand a candlestick and the message of the bulls. And you see, the bulls and the bears have to report to work each day. When it comes to the New York Stock Exchange, they've got to report to work at 9:30. They're off at 4 p.m., but between 9:30 and 4 p.m., they're working hard, making signs for us, and it's up to us to be able to read those signs, to be able to help us understand what it is that they're trying to communicate to us. It's called sign language when we take a look at the markets out here. But here's the deal. Here's the subtle thing with regard to sign language when you take a look at the Russell 2000. That little gap down here, if you take a look at yesterday's close and you go ahead and fill that in, really technically this doesn't qualify as a hammer candle. Nonetheless, the bears were not able to truly punch down and close inside those swing points. They'll be back down there. Probably there is a bit of a bounce that is in play out here. So that's the IWM as it was trying to crack through the lows. The real key thing out here inside the two ETF structures, the SPYs and the Diamonds, and when it comes to one of the indexes, the New York Stock Exchange, that was really the message of the markets. Now, if you know me, if you've listened to me, you know I'm pretty calm. I got a lot of energy. There's no question about that. But really calm when it comes to decision-making and patience and just simply sitting back, let the market communicate to us, and then go ahead and take some action. Well, the market communicated to us. It was as if it was a loud bullhorn out here. Now, to me, the most fundamental aspect of trading and investing is looking at technical patterns, because this is truly what the bulls and bears are communicating to us. If we start off with the SPYs, number one, the SPYs were pushing lower today with big volume of 147 million shares. So in essence, you've got volume off of the top today. But more important than that, you have the single largest, biggest, I don't know what the single, how about this, the single most bearish pattern that could be formed at all-time highs out here, and that's called the island reversal. An island reversal, what is that? Well, in this case here, it transpired over a period of 5 days. The 5 days beginning with May 9th. The top of the May 9th candle session, 188.04. The very next session, market gaps up. And a gap is just simply where you have a void of price, with the futures market just simply gapped up there. So you got that void of price there. The low of that session, May 12th, 188.75. What happened today? In fact, if you really weren't paying attention to the stock chart, you might not even notice it here. But if you take a look at the low of yesterday, the low of the May 12th area, what you'll see is the high of today, which is 188.72, that what we had out here was we had a 3-cent gap. Now, somebody might not think that 3 cents means a whole lot. That's like walking down a street, seeing 3 pennies, and just simply continuing to walk by. Folks, when it comes to 3 cents, and this island reversal top in the SPY, do not walk by. If ever there was a bearish message, and does that mean that the market has to go down? No, it does not. But if ever you were looking for a message from the markets, this is it. Likewise, if those highs get taken out because of how bearish this pattern is, because you learn more from failure than you do from success. In fact, you can't have success without failure out here. If this pattern fails, meaning that the highs from the trading session here of March 13th, this market is going to roar higher. But we're on this 6-month unfavorable seasonal cycle out here. You just had one of the biggest bearish candles, most bearish candles out there, candlestick patterns. In fact, there's a couple of them out here. I'm going to pull up the one that really sticks out at me because it's during the unfavorable seasonal cycle as well. And that was the island reversal, the abandoned baby top in this case here, because this only took 3 days to form, and that's back on July 7th, 2011 out there. So the signal that came out of the SPYs today is absolute caution. If you are not using stops, please use stops, because you got a message, that same message here, inside of the Dow Diamonds. The Diamonds today, volume off of the highs, 7.5 million shares to the downside, an island reversal pattern out here. There could be no clearer message in the markets than to take cover, than to take appropriate action out here. I am not an alarmist. Far be it from that. But there is no question that we got some big signals today. So, folks, again, I'm Steve Rhodes, the morning anchor here at TFNN.com, author of Mastering Probability, daily newsletter service that is the key to your financial freedom. My service, Mastering Probability, is outperforming the S&P by 114% during the last 10 months. All I'm asking you to do is invest $5 a day in yourself and receive in return what's been averaging about $95 a day on a $100,000 account balance. Again, click on my name, Steve Rhodes, on the homepage at TFNN.com. Check out Mastering Probability. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for this evening. And, as we do each Thursday at 20 past the hour, we spend time with our man, Andy Hecht. Now, Andy hosts the Commodities Hour each Tuesday and Thursday here at TFNN from 3 to 4 p.m. He's the warm-up band for the Tom O'Brien Show. Now, Andy's been a commodities trader, well, really since I've been in diapers out there. So that's a long, long time out there. And he's been involved with some of the largest commodity trades in the 1990s. He's author of an incredible book titled How to Make Money with Commodities. Folks, if you don't have that book, go over to the homepage at TFNN.com, click on his name out there, or go to Amazon. You want to have this, books are so important. Leaders are readers out there, so get over there. How to Make Money with Commodities. He's also author of a fantastic newsletter service called the Technomental Commodity Report, which you can test drive for free for 30 days. Now let's go to our commodity king, Andy Hecht. Andy, how you doing today?
I'm doing great, Steve. How are you?
Excellent. So
good. Thanks for that nice lead-in. I wanted to just say something before we talk about commodities.
Sure.
One of the things we do really well here on TFNN is we provide content. We might not always be right, but we definitely tell the listeners, what's on our minds, and I think that goes through all of the hosts here. And
totally.
A funny little anecdote. I came home from and I mentioned this on my show today, came home from dinner with some friends last night, and I popped on the TV to see what was going on in the world, and I turned on CNN.
Yes.
And you got a tragedy unfolding in a coal mine in Turkey. You have little children who are kidnapped by terrorists in Nigeria. You have a Ukrainian situation where Putin is squeezing the Ukraine out, telling them they have to pay cash for their energy. And I turn on CNN at 9 p.m. And you know what's on at 9 p.m.? They're interviewing Donald Sterling's pimp on CNN.
No. Really?
Oh, I'm serious.
Well, I'm surprised. I'm surprised you got home at 9. Well, you know what? Maybe it's tape delayed, because if you were coming home at 9 o'clock, I'm pretty sure there was a hockey game on. You were turning on the wrong channel anyway.
It is tape delayed because I'm on the West Coast. So, but it was shocking. Believe me, I would have put the hockey game on. But I just think it's unbelievable that's what I guess the network thinks that listeners are interested in watching.
Well, look, to your point, and it is true, is that the great thing that we have here at TFNN is that you've got each contributor has their own set of talents or skills, but the one thing that we all share is honesty with regard to the way that we see the markets and calling it. And yes, we can't control what traders are going to do, but when you take a look at the entire skill set and being able to, instead of, we're sitting here reading the charts telling you what the markets are going to do versus telling you what they've just done. Now, we certainly have to look at what they've just done.
We're giving our best estimate using our experience. And, like I said, sometimes we're right, sometimes we're not right, but at least we're providing food for thought. That's the most important thing.
Yeah, and what's great is that, some of us are bulls.
Here's for some food for thought. Yeah. Silver.
Let's go. Let's take a look at it.
Let's talk about silver. Because I have up here, which I'll put up in the den if we can get it up there, a silver chart, but not a short-term chart, a monthly chart.
Ah, okay.
And what you'll notice, Steve, is that the momentum indicators, the stochastics, and the RSI are so oversold. This silver market is the most oversold I've seen it in 28 years. So that's one thing. Now, on the fundamental side, demand for silver coins has never been better. Stocks of silver in China, in Shanghai, have been dropping. Demand for physical silver bars in India and China is doing very, very well. Now, silver has been trading in a very tight range. We've been trying the downside over and over. And I think like a rubber band being pulled, it's about to snap. And I think that silver is about to move higher, aggressively higher. And let me tell you why. A couple of reasons. First of all, the fundamentals. Second of all, the fact that silver is very, very cheap on a historical basis relative to gold. You know, for the last 40 years, the average ratio of silver to gold is 55 ounces of silver in each 1 ounce of gold value. Okay. Right now, we're trading at 66 to 1, which means silver is way undervalued. So I'm expecting both gold and silver to do well, but I think silver is going to lead this. And what we saw earlier this week is just the beginning of a decent rally in the silver market. And I'm kind of a contrarian, so I know that silver's dead. No one's really looking at it now, but I think this is a good time to start looking at it with a very critical eye.
No, you know, I like it. You know, we take a look at chart patterns. So you mentioned the monthly chart pattern out here. Now, one of the tools that I use, it's something created by H.M. Gertley from many years ago, and it's a it's a bullish pattern that's out here that I'm looking at. It's a 0.786 Gertley buy pattern, and as it made its low back in June, the 1818 level gave a nice reversal signal by the month of August out here. Big, so it's got some real support down at that 1818 level. And I'm glad that you brought up the monthly chart, because oftentimes, you know, when we're doing the radio shows, at least myself, I spend maybe a little bit too much time on a daily chart, or I'll flip to a weekly chart. But no question, I just pulled up the monthly since you mentioned it, and the pattern I had was already drawn in there. And so, yeah, you know, if it can hold this 1818 level, no reason for it to not take off.
Yeah, I just, you know, there's just a lot of things that seem to be coming together about silver here. So that's a really interesting commodity. I mean, as far as the big movers today, we had the coffee market, you know, reject lows and spike 11 cents higher. So that was a big move. There's a lot of interesting things going on in the soft commodity space. Sugar has been pretty interesting lately. Let me see if I can put a sugar chart up here quickly, Steve.
Yeah. And where do you think sugar is headed to? Do you have a price target on sugar?
Yeah, I think first of all, the next level in sugar we're looking at is 1860.
Okay.
And if we can breach 1860, I think it's pretty clear sailing up to 20 cents plus in sugar. Now, there's some fundamental news. You know, I look at fundamentals as well as the charts.
Yes.
You know, the Brazilian drought, which has caused coffee prices to basically double from where they were a few months ago, has also affected sugar, because sugar is the largest, Brazil is the largest producer and exporter of sugar, cane sugar in the world. So that crop will be slightly lower. And, you know, I think that sugar has been, you know, just trading back and forth for a while. And it broke out on Tuesday, followed through with a very nice rally, followed through yesterday. Today tried yesterday's lows and closed right near yesterday's highs. So I think this market's looking good, too.
Oh, that's great. That's great. Anything else that you're seeing out here commodity-wise that folks need to be really paying attention to? So you got silver.
Yeah, I think, you know, crude oil has been tough here. Crude oil has been, if you're bullish on crude oil, you've been frustrated, and if you're bearish on crude oil, you'll be. Now, if you were going
to take the Ukraine aspect out of it, what would you be saying about crude oil? Downtown?
I would say crude oil should be $10 lower. The supply, U.S. is a huge producer now. We have a lot of stocks of crude oil around.
Yes,
and I think that, you know, the Ukraine is a supportive factor here, and there's a lot of longs in this market who are long on the Ukraine. So, you know, I think there's a political premium there. There's always one. You know, it's either the Ukraine or it's the Middle East, one or the other.
Thanks so much for your time, Andy. Folks, get over to the homepage at TFNN.com. Sign up for Andy's newsletter service, a Technical Commodity Report. Take care, Andy.
Take care, Steve.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom this evening. Thanks so much for joining us. We had the Dow finish off 167 points, the S&P down 17. I had a request to take a look at silver Wheaton. We just had Andy Hecht on, was talking about silver, giving you all of the really fundamental reasons why he believes that silver is going to take off from a technical standpoint as well. He had me pull up the monthly chart, and we saw that nice 0.786 Gartley buy pattern. We also saw that silver's been trading in a descending price channel that it's attempting to break out of. Now, it's been moving sideways. I hate when channel lines, trend lines get broken just simply by moving sideways. That's the lazy way to do it. I like to see some conviction behind the move. And the request was to take a look at silver Wheaton. That's what we've got up on our screen here right now. Silver Wheaton, we'll take a look at it using a couple of different tools out here. Stevie's got a number of tools in his tool chest out here. We're taking a look at SLW. That's a ticker symbol. Now, what we can take a look at and so if silver's going to take off, and we take a look at a great looking stock out here, silver Wheaton, from the standpoint of silver Wheaton, the week of February 14th. Had a nice sign of strength. And that's what you like to see in an equity that you're going to buy, a sign of strength. If we take a look at that, it had 33.9 million shares to the upside. Now, when you take a look at a sign of strength, you can make a fortune just simply buying the pullback on a sign of strength. Now, the ultimate pullback is where it comes back to where it broke out of, which typically is not the actual candle where you've got the volume. It's the candle before. Or maybe it's a little bit lower than that. It could be two candles before. In this case here, if we take a look at the candle prior to that, the weekend of February 7th, you'll see volume there of 23 million shares. Now, last week you were down with 13 million shares. Folks, that is coming back to a breakout area on light volume. And so the question was, is this a buy here? Well, based on that, if you were going to be buying breakouts, the answer to that question is yes. Now, if we take a look at silver Wheaton here, I'm going to go ahead and put up the Taz Signal Box market profiles. Each morning at 8 o'clock, our man John Logan does a video for you, and that's available on the homepage of TFNN.com. Let's take a look at silver Wheaton. Let's look at it on the weekly chart out here. Now, market profiles, it is it's a mathematical calculation to help you identify basically where you've got some support and resistance out here. And if we take a look at the weekly chart, the green line, the horizontal line going across my screen out here, shows you that support is this. So this becomes a relatively easy trade out here. 21.55 is a level of support. If at the end of the week price were to close below 21.55, now I don't mean 21.54, 53, a little bit of significance out there. The weekly chart would be saying, hey, not so fast. So that is a nice level of support. If we take a look at the daily chart out here, guess what? It's daily chart, which was pierced today. It means tested, intra-session. 21, the low today was $21.50. 21.58 on the daily chart is a level of support as well. That's using the Taz Signal Box. So, everything here looks like this is a trade. Now, where are you going to run into resistance? Remember, the key here, the key to making money is to be a strategist. And what a strategist will do is a strategist will make a reward-to-risk analysis. And that reward-to-risk analysis means that you are going to bracket every order that you place. It doesn't matter to me whether you're placing a trade on a longer-term time frame, such as a monthly or a weekly chart. When you place that trade, that is when you are most objective, just prior to going ahead and pulling the trigger. And what that means is you want to know where your stop is on a long trade underneath your buy area, and you also want to know where your exit is. You can always go in and change it. But what you don't want to be, what I don't want you to be, is a deer looking into a headlight saying, now what do I do? And that's what happens when you don't place a physical trade, a hard stop on both sides of it. In this case here, if I was looking to where would I go ahead and take some profits, well, on the daily chart here, $23.07 is likely going to be a initial target on the daily chart. Remember, getting in and out of a trade, you can always do that. So if during the day, this way you don't have to be in front of a computer. You let the market do what the market is going to do out there. I'm not saying that is where silver Wheaton is going to trade to. You can most certainly trade higher out here. But as I said, you can always modify your trade. So learn how to put together a one cancels other bracketed order. All trading platforms have it. And if you're using a trading platform that doesn't, then get out of Dodge. Let's go to our man, Pete, in Long Island. Pete, thanks for calling. Thanks for holding. How you doing this morning, or this afternoon?
Hi, this afternoon, Steve. Hi, Steve. I'm doing fantastic, and I just want to say you've been doing excellent. Your calls are just number one. You're number one at TFNN.
You're too kind. You're too kind.
I have to tell you, you've helped me, with so much education, the brackets that you talk about and so forth and so on. But I followed everyone on the show. And by the way, Andy's very good, but with all due honesty, he's been long silver for the last 6 months, So, your calls have been excellent.
I think for a good reason. He's Nelson Bunker Hunt. He's building up a nice stockpile out there.
I think so. Andy's very good, bud.
Yes.
I just want to ask you about gold. You've been really on top of these things, and you've been on target in the newsletter as well as when you speak on the radio. Gold, I bought 2 contracts today at $12.91.90. I have my stop in very close at $12.88. It seems to keep going to that $12.90 area and bouncing off of it and trading up to about $13.10. What do you think of this trade, and what advice would you give me on this trade?
Okay, so now you're taking a look at this as truly being a trade versus in a trade you're looking more from a short-term-ish type standpoint. Is that correct? Okay, so on the 120-minute chart out here, we use that as a short-term chart. Looks like your buy came in nicely. What happened here during the last couple of hours is the TAS signal box put in a new level of what it's referred to as the unfair low, unfair high out here, and at 1292.50, it's saying that on a 120-minute basis, if you see a close under 1292.50, Pete, you're probably wrong on the trade. Now your stop is at 1288, I think you said, and chances are if it pierces the 1292, it's probably going to pierce down below that area. What I would also say, because of having the bracketed trade out here, you'd also look for resistance somewhere around 1307 to 1309. I think you mentioned you had a couple of contracts out there.
Yes.
1302. So 1302, you'd have some nice, you'd have about $4 into it on a short-term basis. At 1302, you might. That's what's referred to as the point of control, and that's where the most activity is. It's like driving down the expressway, and you're going to run into traffic as soon as you come to this one intersection area, this one exit area, this one, and that's really what you're going to find inside gold on a 120-minute time frame, the 1302 level. Now, that doesn't mean that you have to close out the trade. I just want you to understand on a shorter-term time frame where your congestion area is. If you were trading on a longer-term time frame, I'd say, boy, you'd like to be able to get in around 1280 to 1274. But that's not what you are trading out here. I'm going to put one other thing. I'm going to go from the 2-hour chart to a 4-hour chart for you. But does that help you out as far as what what you should be looking at?
Yes, and when would you put that stop in on a short-term basis? You would move it up because you said 1292 is the area. If it pierces 1292, it's going to go down.
I would not move it up. I would not have it that tight out there. I think you need to give it a little bit of room. At least that in my opinion. I'm just suggesting that if gold pushes down, because what you can do is it can pierce. The actual low today on gold has been 1290.90. So I guess you said 1288. I think that seems logical to me. For the shorter term trade.
And Steve, I got in at 1291.90, so basically the reward risk ratio would be a 3-to-1 with a stop at 1288 and a out at 1302. That's 3-to-1. Not bad.
No, hey Pete, I think the guys are lining up. I can see the lines are lit now. They're lining up. They're all asking for your crystal ball service out there because they want to be able to buy at that same low. So I think you got a lot of business. We just got to somehow get them over to you.
If they want the best in the business, they need to speak to you, Steve, because you've been excellent. And thank you so much for all your help. I appreciate it.
You bet. That was Pete in Long Island. Folks, I am not related to Pete out there, but I will be sending him a Krugerrand for that nice recommendation. In any event, let's get back to these markets out here. So we took a look at silver, wheat, and we've taken a look at gold here, of course, on a shorter-term basis. But let's go back to, in all seriousness, we're going to do that certainly during the next 15 minutes. I'm going to go back to one of the indexes out here, and it's the New York Stock Exchange. And we come back, what we want to do is I want to show you what's going on out here because that's the wider breadth of the marketplace. In fact, we'll take a look at each of the indexes out here. And there was a huge signal that was given to each of us today with regard to the markets. The people on the other stations may be trying to figure out what happened today, what does it mean. I'm going to keep it really clear for you, as clear as you can possibly get. The most bearish reversal pattern at all-time highs inside the New York Stock Exchange took place today. That is not a bullish sign, period. End of story. If the highs get taken out, then this market will be long and strong. When we get back, we'll go take a look at that.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, the morning anchor here at TFNN.com. Remember, you can catch all of our shows. We're programming 9 hours a day. All of our shows are archived. You can get them at iTunes as well. Have them on your mobile device out here. It's really all about education-based marketing. And as a result of educating you, I want to take a look at the New York Stock Exchange out here. Now, today, it formed a island reversal pattern. And if you've been listening to me, you know that I have been very bullish. Yesterday morning, we closed out our bullish position. Now, I did not take a short position in the market, not yet. However, today's signal, now I went ahead and dusted my bear cave out there. It had gotten a little dusty, but it looks like I'm going to have to be in that bear cave here for a while, unless one of two things happens. That one thing that would happen, well, really only one thing. The only thing that would change my mind at this stage is the island reversal patterns that occurred today have to go away. If they go away, by going away, meaning to close over the all-time highs, then it's time to get back on the long trade out here. Now, we've been in a market that has been very, very choppy out here, going in both directions as if it can't make up its mind. Well, today was a huge signal with regard to what it wants to do. The market's really broken down, in essence, in 2 6-month seasonal patterns. One of those is the unfavorable seasonal pattern. That's what we're in here right now. And the signal that came today with that island reversal in the New York Stock Exchange, look, the last time that occurred was back here on December 31st as the markets were making all-time highs. Now, of course, it was just trying to slip one past. Most people weren't paying attention. Everybody had on their party hats out there. Nobody was really taking a look at what was going on inside the New York Stock Exchange or anywhere inside the markets out here. Now, just because you get that most bearish pattern, does that mean that the sky falls in? No, of course not. And if you take a look at the NYSE, that 1231 island reversal pattern out here, you can see the market really kind of traded sideways all the way up into the January 21st time frame out here. Folks, you need to see a close above the top of that island reversal. And what took place here, once the market then started to really crater, is we saw a move down into about the 200-day exponential moving average. Now, on my screen here, I have a little yellow box. It's really a measurement of that move down. So if we just take that same move down from the island reversal pattern from the all-time high thus far, May 13th out here, you'll see price actually moves down to about the 200-day exponential moving average. And that is what I would expect us to see inside of the NYSE. Doesn't happen tomorrow. In fact, we're coming into a Friday. We're starting to get towards that summertime, area where the volume starts to be light on Friday. The most bearish thing that could happen would be a bounce in the market tomorrow, because it is likely going to be on very light volume out here. Now, these markets, when markets top, when they form significant tops out here, It doesn't happen all in one day. It's not with a flurry and all of the markets top on the same day. In 2000, it was the Dow that topped first on January 14th. The Russell, NASDAQ Composite did it on March 10th. The S&P and NDX 100 took until March 24th. The New York Stock Exchange took until September of 2000. But folks, that put in a significant top. In 2007, the Russell put in the top first on June 1st. The New York Stock Exchange, Dow, S&P, each did it on October 11th. The NDX 100 and Composite just a couple weeks later on October 31st. Well, here's what we've got going right now. Russell 2000, no question, the weak link out here. That topped on March 4th as we speak. Until that high gets taken out, that's topped. NDX 100 and Composite, they've also been weak. That topped on March 6th. The Dow, the S&P, and the New York Stock Exchange now with these reversal patterns, these island reversals out here in the Dow and the SPY, not in the S&P 500, in the diamonds instead of the Dow. In the NYSE index here, you got an island top. All of them making highs on May 13th. Everything is really lined up with us going into the cycle that we're in, this unfavorable seasonal cycle that is out there. So please be careful. If you want to understand why did the markets finish off of their lows today, well, that was really taking place because we saw a couple of our liquidity indicators. One of those liquidity indicators being the Euro-Japanese yen. Now, as the Euro-Japanese yen was making a lower low today, that was at about the 11 o'clock time frame here. It was making a lower low, and it was doing it on what? It was doing it on less relative weakness, slightly. It was doing on less relative weakness. This is a 120-minute chart out here. Also, at that same time that it was making that pattern, it was a bullish engulfing candle and a key reversal session. And on that next candle session at 1 o'clock, it was a hammer candle that had formed out here. In fact, we've seen back-to-back hammers during that session here. That last hammer came in at 3 o'clock this afternoon. That says this low out here, 138.96, is very important. I have an expression with regard to hammer candles, and it's this. It's if you're long, you're wrong, and that's when you see a close below a hammer candle out here. Look, that makes that low of 138.96 really important. If we come in tomorrow, come in tonight, you start to see the euro trading below that, not just trade below it, but close below that area, you'll see the markets move lower. This morning when I was on, I do 9 to 11 o'clock in the morning, markets were certainly moving lower. And the real key here that I mentioned was the VIX index. Now, a lot of people are starting to talk about the VIX index here, and what it did today, what I'm showing you on my screen here is the VIX index, and that's at the top portion of my chart. Bottom portion of my chart is the S&P 500. The VIX got up to about the 50-day exponential moving average. That's 1389. The actual high today in the VIX was 1377, and then it sold off. Folks, when I was on the show this morning, what I said is the most bearish thing that could take place today is that the VIX closes right around 13, 17, 18, 19, somewhere in that range out here, versus close at its session highs. So all of you that wanted it to close, and now I guess there's a couple different ways to take a look at it. Why do I say that's the most bearish thing? Because the VIX index, when it has a one-day rate of change in excess of 10%, you'll see a bounce within the next 48 hours. Now, on one sense, if you're not short, you're like, hey, I want to see that bounce so that I can get my shorts on out here. But what it did, we've got to take with regard to what it did today. It closed at 13.17. With regard to what percentage of one-day rate of change, it was only, about 8.2% out there. The key is going to be what happens. Does the VIX get above the 50-day exponential moving average? That's priced at 13.89. Why? Because when the VIX travels above the 50-day exponential moving average, I could care less what it's priced at out there. When it travels above the 50-day exponential moving average, that's where you see real carnage in the markets out here. So that is really what happened today. Stay with us for the next hour as well. We'll go take a look at the S&P 500 sectors, maybe do a little more thorough analysis of what went on in each of the indexes out here. Do yourself a favor, folks, on the Morning Anchor at TFNN.com. Those shows are archived on Channel 9 and Channel 10. I've got a fantastic newsletter service outperforming the S&P 500 over the last 10 months by 114% in a market that's pretty difficult to navigate. Just invest $5 in yourself a day. $5 a day. It's been returning a return on $100,000. It's $95 on average. On $10,000, it's $950 a day. All the details, homepage at TFNN.com, 30-day unconditional money-back guarantee. Have a terrific Thursday, folks. Thanks so much for being here. Drive safe tonight. Look forward to seeing you soon.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the May 15th, terrific Thursday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, the morning anchor here at TFNN.com and author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'm filling in for Tom for the afternoon. He's on his way back to Florida. And I am absolutely grateful for your presence here today. Now, my outcome this evening is to teach you how to master the tools for trading, and that includes the tools of the mind. Because when we master the tools of the mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD. We'll talk about swing points, Gartley patterns, various candlestick signals at the bulls and bears, the sign makers of the markets for us when we take a look at the stock charts out there, signals like the evening stars, hammers, bullish and bearish, engulfing candles. You know, each of these are signals or their patterns, what I like to call tactical tools or market tactics. But the real key to trading, the real key to investing, the real key is to get your money to work harder for you than you do for it, and that means you've got to have a strategy, what I call mastering probability. That's where I come in, because strategists, they slay the tactician all day long. Now, the foundation of any strategy, well, it's a strong mind. So let's go look at one of our tools. In fact, this tool is very important to us because it's brought to us by our fearless leader, Mr. Tom O'Brien. You've heard him say, he says it every day, what you think about, you bring about, and what you focus on grows. So what does that mean to you? To me, it's a 6-step process to become what you think about. I want you to try this for the next 30 days, folks, because what you'll find is that it will change your life. Number one, write on a card or a memo pad or something on your phone that what you want more than anything else. Make sure it's one single outcome, and make sure it's clearly defined. Make sure it's clearly defined. Number two, don't show it to anyone, but carry it with you at all times. Carry it with you so that you can look at it many times a day. After all, how many times do you look at your cell phone out there? Make sure that you are looking at that one thing on your memo pad. Number three, think about it in a cheerful and a relaxed and a positive way each morning when you wake up. Number four, look at it before you go to bed at night. As you look at it, remember you must become what you think about. So I want you to use your imagination. After all, it is the strongest nation on earth. Number five, here comes the difficult part. Stop thinking about what you're afraid of, your fears. Each time a fearful or negative thought comes into your conscious mind, replace it with a mental picture of your positive and worthwhile outcome. And number six, each day of the 30-day test, do more than you have to do. Take control of your mind, knowing that your returns will be in direct proportion to what you give. Yes, folks, what you think about, you bring about, and what you focus on grows. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We had the Dow finish down 167 points, closing out at 16,446. S&P down 18 points, closing at 1871. Composite off 31 points, closing out at 4,069. Russell 2,000 off 7, closing out at 1095 out here. Let's get right to it. Let's start off by taking a look at the S&P 500. What we really want to do is we want to kind of flip back and forth out here. This is a real important day for you to be with us here and take a look at stock charts out here. So we're going to flip back and forth in between the ETF structures and the indexes just so that you can get a feel for what is going on. Let's go take a look at the SPY first. I'm just getting this thing set up out here. As we take a look at the S&P 500, what did it do today? Moved down to the 50-day exponential moving average. That price is at 1864.84. Now, if you're only going to focus on the S&P 500, you would miss what is perhaps one of the most important aspects, and that is taking a look at the SPY out there, because it formed one of the most bearish patterns that is in candlestick chart. It's not even a Japanese candlestick. It is just simply one of the most bearish patterns out here. It is like Paul Revere riding through the streets out here, only with a big old bullhorn. Now, what does this actually mean for your longer-term trading? Number one, you just got a very significant reversal pattern. Does that mean you should close out all your long-term accounts? Not necessarily, because let's face it, these patterns can be taken out. Here's what I want you to focus on. I want you to take a look at a rising price channel inside of the S&P 500 that takes us back into the time frame out here of, we'll call it back into the November of 2012 time frame. Right now, that price is at right around what we're going to take a look, we'll use the swing point here from April 11, 2014. That low is at 1814. Really, it's probably right around the 1835. If you see it close below 1814, that is when you absolutely do want to be taking a look at what's going on inside your long-term accounts. Why? Because cash is an investment. And we're in a 6-month unfavorable seasonal cycle. How long it'll last, I can't tell you. Is this the major top? Is this a major top? It could be. We just simply, what I like to do is just take information one day, 1 week, and 1 month at a time and look at each of those charts and see what they are communicating to us. And at this stage here, what the SPYs did, if we go over and we take a look, so that's really your setup inside the S&P 500. You know, what I always like to say is get with your, if you're in your 401k accounts, get with your plan administrator and find out what paperwork it is, because you probably don't speak to them too much about your retirement funds. Just find out what it is that you need to do in order to be able to go to cash. Most of you can't really short a market out here, and just see what it is. Have it all lined up there, and then just be paying attention. Remember, you can always get and find out what it is that you've got to do to get back in, get your money back in out here. But if you are linked to the S&P 500, well, and you go take a look at the ETF or the SPY out here, you're going to see it gave you that big old island reversal pattern out here. That's what it did. That's what has formed over the last 5 days. Doesn't get any more bearish than that. If the highs get taken out, then you want to, then you want to be long, because when the strongest reversal signals fail, what it's really telling you is there is a ton of liquidity, a ton of strength in the marketplace, and you can tune everything else out. So much to really be. This is the most fundamental aspect of what's going on inside a market is to take a look at what's going on with the technical patterns out here. Let's go take a look at the Dow. Let's go see what the Dow did today. And down with the volume, when we take a look at the diamonds, we had volume off of the highs out here. The Dow closing out at its 50-day exponential moving average, just slightly off it. The 50-day is at 16,403. It got down to 16,397, closed out at 16,446 out here. The diamonds itself, or the Dow itself, has what's called a butterfly pattern out here. That butterfly pattern was confirmed yesterday. It was confirmed with a morning or evening star pattern out there. That is a bearish reversal signal that occurs over 3 or more days out here. So you had that. You had some follow through today. If we take a look at the ETF structure, you're going to see you had volume off of the highs. And what the Dow Diamonds had was they too had an island reversal pattern out there. So they're just simply screaming that if ever there was an opportunity for the bears to do something, this is it. I mean, as I wrote in my newsletter this morning, we closed out our long positions yesterday. We didn't go short yesterday because there really wasn't the signal at the beginning of the trading session, but there was enough of a signal for me to say, okay, time to close a long position. As I wrote the newsletter this morning, which gets out by 8 a.m., 7:30 to 8 o'clock in the morning, I said if ever there was an opportunity now, because I started taking a look at these island reversal patterns that were out there, if ever there was an opportunity for the bears to really show us what they wanted to do, the market would create these island reversal reversals. Now, when I was writing that, it was at 7:30 in the morning. Futures were basically flat. In fact, I think the NASDAQ was actually up a little bit. But I knew what to look for, and that's really what you need. You want somebody to be able to navigate these waters for you, these shark-infested waters. That's what I do in my newsletter service, Mastering Probability. You can test drive that for 30 days. It comes with an unconditional money-back guarantee, and we're going to go ahead and make money, and I'll keep you on the right side of the trade out there. Cash is also a trade. You can always get into a market out here. So you've got that diamonds down with volume. What kind of volume off of the highs today? 7.5 million shares out there. Let's go take a look at the, let's take a look at the IWM. The IWM here, what the IWM did today was it formed a hammer candle, sort of. And the reason I say sort of is because it is technically a hammer candle, and that tells you it's hammering out a low. Volume today inside the IWM was 74 million shares, pushing into 76 million shares, but really pushing into the February 5th swing point that has 60 million shares. Says price will be back down there. And it will be back down there relatively soon. The reason why I say it's not a real hammer candle is because of yesterday's close. And I like to be able to stitch things together out here. Nonetheless, does say that maybe these lows inside the Russell 2000 hold for a bit longer. We are coming into a Friday, into the summer season out here. The most bearish thing now that could take place tomorrow would be a what? Would be a light volume bounce to the upside, setting up another B to a C of an A to B equals CD to the downside. We got the Dow finish off 167 points. This is Steve Rhodes with TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. I am the morning anchor here at TFNN.com. If we're not on a radio station in your area, you can always catch us by going to the homepage at TFNN.com. In fact, you should have us on your cell phone, on your smart pad, your device out there, TFNN.mobi. That's how you get the audio version of it, so you can get that live. You can catch the video version of it by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone device on that. Click live. You'll be able to see all of our charts out there. The archive of my morning shows there on Channel 9 and Channel 10, respectively. If you are wondering what does it mean, the markets, what they're doing, futures are up, futures are down, that is a show that you want to tune into. Because what I don't do is I don't tell you, here's what the futures are, and then leave it up to, well, not knowing what it is. I don't just report on what's going on. We report on what's going on and why and what type of pattern is out there and what is likely to happen out there. So tune in, and I take a look at different time frames, so that way it makes it easier. You know, I know that about 70% of our listeners primarily are just simply managing their retirement accounts, which is cool, and you need to have somebody to help you navigate those waters as well. Now, with regard to potential bounces in the markets out here, I give you the bearish and the bullish side. Now, the bearish side are these island reversal patterns that we've seen in the MISE, the SPYs, and the diamonds out there. Until the highs are taken out, these charters are shark-infested waters. In fact, there's a big great white shark. In fact, there truly is a great white shark off the coast here of Daytona. It was recently spotted, I think, just a couple days ago. It's been tagged out there, and there are certainly sharks in the water inside these markets out here. Now, a reason why we could see a bounce tomorrow, which is a bearish thing when you're taking a look at a Friday out here, is the chart on the Qs. The Qs did not form a island reversal or anything, and the Qs, what they did, we did have some volume. We did see volume accelerate to the downside. The Qs were going against this little gap up that it had on May the 9th. There was 35 million shares. They gapped up with 38 million shares. Today's move on the way down, 59 million shares. Okay, so that is a word of caution. However, the Qs have a unique personality. What the Qs do, if you go back and you study the Q chart over time, this is one place where volume has a different characteristic. And that is that the Qs tends to make lows, not tends to, not like tens in like, you know, every now and then, like the majority of the time when it has these high volume day lows out there, tends to make, and I'm using that word tends again, it makes, how about that? It makes a bottom, if not short term. What we've seen here in the Qs, when it formed a low and a key reversal session on April 15th, high volume session. The next, in essence, low that formed out here inside the Qs was April 28th. Also a high volume session, 58 million shares. The next time we saw the Qs pull back with any kind of volume, May 7th, 67 million shares. Each time a higher low. Well, today the Qs did 59 million shares, and it was also a higher low out here. And there is still this pattern inside of the Qs where I say it may still want to get up and test the bottom of its trend line that it broke out here, because oftentimes when the market breaks a trend line, it wants to get back up there and test it. This is the trend line coming off of the June 24th, 2013 area. Does it have to happen? No. But it is, you got to always take a look at a market. I like to, I'm a very calm individual. You know, when on the market, I'm full of energy, a ball of energy out there. If you want to have a good time, go hang out at a sushi bar with me, but make sure that you bring along a designated driver out there, because we're going to drink some fire water, some good old, really good Japanese sake. I won't go to a Japanese restaurant unless they serve good sake. And folks, there are more brands of sake. I could teach you a ton about sake. There are more brands of sake than there are wines in France out there, and so there are some really, really good ones. But I know that that's not what you want to hear about, but boy, I could talk about that for hours on end. So the cues here, that means that we want to really just take a look at both sides of a trade out here. It's just really important for us to do that. So we've got the bearish aspect of it. The most bullish thing that I can find is the fact that the cues made a higher low today with volume. You know, they're struggling to get above their swing point out here, which from April the 24th out there. Nonetheless, that's what's going on inside the Qs. So we've taken a look at those four ETFs. Let's go take a look at the spiders out here. Let's take a look at what's going on inside of the sectors within the S&P 500. Let's start with the number one sector, numero uno. So we have that island reversal out here. And if we take a look at the largest weighting structure inside of the S&P 500, that's the technology sector. Goes by the ticker symbol of XLK out there. And if we take a look at what it did today, it came down into its most recent sign of strength. That was on May 12th. That was up with 5.6 million shares, and today was back with 7.2 million shares. So it was coming in, and that's acted as an area of support thus far, and that's the high of May 9th. But really was trading into that with volume. Says to me that, it was 7 million shares down there, so 7 million shares on May the 9th, and 7 million shares today. So kind of a toss-up here. It is an area of support. So the technology sector has not exactly just broken down here just yet. Let's look at the, I'm going to do all 9. Let's look at the industrial sector, the XLI. The XLI has a nice trend line going back to November of 2012. And if we take a look at that, the trend line out here has not been broken. What the XLI did today was it pulled back with some volume, so 13 million shares into that little sign of strength that it had as well on May 9th, May 10th out there. Closed inside, just barely inside May 9th. If that trend line gets broken right now, probably priced out, I would have to estimate around the $52 area, close at $53.02. That would be a bearish signal out here. That's in the industrials. A close below that trend line would certainly be bearish. The healthcare sector here has got its own trend line coming off the highs from March the 6th. That's your touch points. You can also use the high of March 19th, the high of April 4th. Price broke above that level. Did it here on May 12th. Today it gave you a reversal pattern. This is a evening star reversal pattern, plus it closed back inside the trend line out here. Volume-wise, on today's move inside the healthcare sector, down with 6.4 million shares, going into about 7.2 billion shares from the session of May 9th. So not enough to bust it down here just yet. Let's take a look at the financial sector, the XLF here. XLF coming back and rejecting the swing point from April 11th. That had 79 million shares there. Today you were down with only 39 million shares. So not enough to bust down the financial sector out here. Building materials sector out here, the XLB down with 6.5 million shares going into 3.9. So this is showing some weakness out here. XLB, I don't know if there's another ETF like a double or a triple to play for that, but one might want to look there. If we take a look at the XLY, that is the consumer discretionary area. 9.6 million shares at the swing point of April 15th. Today, down and rejected with only 5 million shares. Maybe a little bit more of a defensive play going on inside of that sector. The utility sector here, just traveling sideways. Nothing really going on there that I can report on. The XLP, consumer discretionary, that was pulling back today. But volume, not too bad. Volume off the highs. 4.7 million shares. It made a high with 2.5 million and 3 million coming down yesterday. So it has started to accelerate to the downside out here. Again, folks, Steve Rhodes here, your morning anchor, filling in for Tom for the show. Click on my name, Steve Rhodes, on the homepage at TFNN.com. Go check out Mastering Probabilities, outperforming the S&P for the last 10 months by well over 100% out there. We'll be back in just a few.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, to TFNN.com. I'm your guest host, Steve Rhodes, filling in for Tom out here. You know, in that last segment, I was talking a little bit about sake out here. So let me, for those of you that have not, if you've never tried cold sake out here, and you got to try a good brand. So that's why I'm going to give you some hints out here. You know, do yourself a favor and do it. And have it. Now, what you want to do when you order cold sake is the first thing you want to do is you want to ask the waiter or waitress to stick the bottle in the freezer for a while, because you want it nice and ice cold out there. Now, the type that you want to order is something from Japan. So when you see something that says Geki-kan or something like that, don't get rid of that. Where you want to try to, with sake, it's all about the rice and the water. With, red wines, it's all about the grapes, right, and where it's coming from. And so with sake, you're looking for, see if you can find, like we have in our cities, right, we've got counties. In Japan, they call them prefectures. And what you'd like to find, the area where you're looking for some good sake from the mountainous zones. You'd like to get it from, like, Niigata. Nigati, I believe. Any sake from Niigata is good. Nagano is good. But you want to get some, and it'll say on the bottle most of the time out there. Now, the different kinds of brands, flavors, if you will, like the difference between a Bordeaux and a Pinot Noir or a Cab. What you want to do is, a lot of them, they'll say, like, Ginjo or Junmai Ginjo or Junmai Dai Ginjo. The more words in a Junmai Dai Ginjo, the better the sake. Sometimes a little bit sweeter, if you will, a little bit silkier, smooth and silky. So that's what you want to look for, and you want to do yourself a favor and have a nice cold sake out there, because after your first one, you're going to want your second one. And if you don't like it, then send me an email. And save the bottle and ship it to me. I'll buy it from you. But it better not be one of those American brewed sakes out here. And anyway, I had a request to take a look at the SOX index, I believe it was. And, we'll take a look at during the next 20 minutes or so. We're going to look at some of the weekly and monthly charts out here for signals. So when we take a look at the weekly chart here for the SOX, it's got one of my favorite reversal patterns, whether it's at highs or lows out here. Weekly time frame is going to have more meaning than a daily, right? So on the weekly time frame, and what we'll see is consistency amongst the indexes. Here in the SOX index, this market's not going to go down without the SOX index joining in on the gang, and it has provided us with a price relative strength, a divergent pattern. In fact, the week of April the 4th, you had a little shooting star and some follow-through. The following week on April the 11th, another. Right now for this week here, it closed below 567. It closed at 570 today. At 567 for the week. Tomorrow would be another bearish sign inside of the SOX index. If I go take a look at I'm going to pull up the New York Stock Exchange out here. Another chart here hasn't updated for the day's activities, but you just have to trust me. It has formed a bearish engulfing candle thus far this week. And so long as the New York Stock Exchange closes below 10,589.42, today it closed at 10,568. You would have a reversal signal on the weekly chart for the New York Stock Exchange. I had a request to go take a look at what was it? Oracle, I believe it was. Yeah, Oracle. So let's go take a look at Oracle for our Tigress in the den, Angie. So ORCL is the ticker symbol. Let's go see what it is doing. She wants me to take a look at a monthly chart. She's got this thing mapped out. And as we take a look at Oracle, close the day at 41.93. But let's convert this over to a monthly chart. She's identified off of the 2009 low. She's identified A to B equals CD pattern. Now, she's using as the swing point low, March 31st. That price level is 1380. That's your A point. Your B point out here is going to be the high that came in May 31st, 2011. That was at a price point of 3650. There's your sell in May cycle out here. Now, the larger A to B equals CD, if this is what Angie's looking at, the B point is the August 31st swing, 2472. A 1-to-1 A to B equals CD takes it up to 47. Yeah, 47 to 43 out there. She's got this thing pegged. Now, if we take a look at the monthly chart here, the volume on the session of May 31st, 511 million shares. That was crossed with 468. Cross with 334, 254. So it hasn't really confirmed from a volume standpoint to the upside. That doesn't mean that it can't complete the move all the way to 47, 43. Right now here on a monthly basis, it's not giving you any kind of a reversal signal out here. If we go ahead and folks, remember, this is a market that is full of stocks, so even with a market that could move lower, there's going to be stocks that are going to move higher out here. Now, you'd prefer to see, in this case here on the monthly, a confirmed A to B equals CD upside. Maybe there's one on the weekly chart out here. And on the weekly chart, let's take a look at the high in May of 2011, and that had volume of 141 million shares. As that was passed, it was done with 188. There you go. So there is, well, close. It didn't actually get above the swing point. May 6th swing point high was 36.50, and price was moving into it with volume of 188 million shares, but didn't close above it. That was the week of December 20th out here. So even on the weekly, let's see, how about here? 118. Yeah, even on the weekly, you still don't have the confirmation out there. However, on the weekly, what you do have is that price is traveling right into that shooting star. That is the opposite of the hammer candle here. That says you should have resistance at $42 even Steven. Now, our man Basil Chapman, he loves those round number highs out there. So, Angie, you better please tell Basil about Oracle and that $42 round number high. That has been tested here. We've seen a high so far this week of 42.17. The volume is 152 million shares. It looks like it is going to fail at that level out there. But still, nonetheless, that's if you can close above volume or not. If you can close above $42 from April the 4th out there, that would still be relatively bullish, and that is on Oracle, ORCL. Now, let's try to let's see how we've got two segments here, and what I wanted to really do is really try to wrap this all together for you with regard to what's going on in the market. So what I'm going to do here is there's a couple of liquidity gauges that we really need to be paying attention to. How does this all fit together? What are the pieces of the puzzle? And the euro, Japanese yen. So speaking of sake, which will take us over to the yen, if you will. The euro Japanese yen is the currency pair that is the carry trade. It is a liquidity gauge in the market out here. This currency pair, you don't need to trade the currency pair. I'm not asking you to trade the currency pair. I'm asking you to pay attention to what the currency pair is doing. Because this currency pair tracks the U.S. stock market better than any other currency pair. Let me give you an idea. Let me show you a correlation chart out here. Now, we're going to do that. We've got Kim in Denver on the line, and she wants to talk about TZA. So we're going to go to Kim in Denver first and talk about TZA, and then we'll get back to the euro Japanese yen. Kim, thanks for calling. How are you doing today?
I'm fine. How are you, Steve?
Excellent. Thanks so much for asking.
I was looking for a stop for the TZA.
Looking for a stop. All right. So if we take a look at the TZA, one of the things that I like to use is what's referred to. I'm sorry.
No.
Well, what I like to do is I like to use something called the. Now, tell me, how long have you been in the trade, and what is your outcome when you got in that trade? Because that's really where we need to. That's where we need to start first. So tell me.
I got in a couple of weeks ago.
Okay. And is this a longer term trade for you? What's the, with the signals that we've seen here? What is your, what's your time frame that you're looking? What is your typical time frame for trading?
Short term, I talked to Tom probably a couple of days, 3 days ago.
Okay.
He was looking for the IWM, TWM. IWM to go down to like 92, around that area.
Mm-hmm.
So I was wondering where to put a stop for the TZA. Yeah.
So if you got into it a couple of weeks ago, you're in pretty nice shape out here. You know, one of the things that I would consider doing is I would consider placing a stop somewhere underneath today's close. And what I like to do, Kim, is I like to take the average true range. The average true range, what I look at, is the average of the price movement over the last 10 trading sessions. And that has been 92 cents. So the TZA on average moves 92 cents. So you got to take a look at today's close of 1844. And tomorrow you need to expect that just the movement from high to low, normal movement, is 92 cents. You have to determine if it moves 92 cents to the downside, are you still okay with that trade? Mm-hmm. I personally like to use some type of Fibonacci expansion of that. Either 1.272 of that number means I'd multiply 92 cents times 1.272, or 1.618 if I'm looking for a longer-term trade out there. But if 92 cents is too tight for you with regard to your stop, then you might want to take a look at...
How about longer term with a fib of 1.618?
Yeah, so take 92 cents, multiply times 1.618, subtract that from 1844, and that's where your stop should be. That's how I would trade it.
All right. Thanks for your help.
Hey, my pleasure. Thanks so much for calling. That was Kim in Denver. When we get back, we're going to go take a look at that Euro-Japanese yen, and I say kompai. Maybe I think I've got a bottle of cold sake in the refrigerator. Something to think about. We'll be right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks, to the Tom O'Brien Show. We're into our last segment here, and thanks so much for being with us today. Tom will be back with everyone here tomorrow, and, of course, I'll be back with you first thing in the morning. I kick things off for TFNN.com, 9 o'clock each morning. If we're not on a radio station in your area, just remember you can go to your smartphone device, type in TFNN.mobi. You can catch the live audio stream of each of these shows out here. Now, before we were talking to Kim in Denver, I'd mentioned the Euro-Japanese yen. Excellent currency pair to be paying attention to, because the tango that it does with the U.S. markets, there's no better currency pair out here. I mean, it is almost in lockstep. Now, it's not tick for tick out here. But the cool thing about the currency pair is that when there are divergent patterns that exist and divergent patterns that occur, it's a currency pair that usually wins the battle. In fact, recently we've seen one time period where there wasn't the case, but that's like 1 out of, 50 or more time periods out there. And in essence, as the market was moving higher, that's the S&P 500. Well, in this case here, it's the ES Mini that I've got on my screen. As it was moving higher here off of the swing point here from about May the 5th, it was moving higher, and the Euro-Japanese yen was not. The Euro-Japanese yen was moving lower. That was, now, it can't be used as a timing tool. You have to use other techniques out there to make that determination. And what we are now seeing is that the market is very quickly catching up to what the Euro-Japanese yen. So this correlation here, which gave us a signal that an impending type of correction was in place, has basically occurred, or very close to almost completing the work that it needs to do to the downside. And what that means is then you need to go over, since things are now getting back in lockstep out here, now it's a matter of going and taking a look at the currency pair and say, hey, what's the currency pair have inside for us now until the next divergence appears? And if we take a look at that currency pair, you're going to see several bearish patterns out here. Number one, you're going to see a rising wedge. Those are the two red lines. They are patterns that typically resolve themselves to the downside. When they don't, it tells you really got a strong trend going in place here. Well, in this case, the Euro-Japanese yen, which had traveled sideways for so long, got to the cone of silence, got to that area there, and then moved to the move downside. Now, when it was moving downside, it's also had another pattern, which is a consolidation area where it travels sideways. It had a breakout, which began that consolidation on March the 6th. Well, guess what? Price broke through that here, broke through it on April 9th, came back and tested it on May 12th, and then rejected that area on May 13th. When you have price do that in a pattern, in this case here, the Euro-Japanese yen, typically the move is equal to or greater than the consolidation. That's the little yellow box you see on my screen. That says a move down to about the 137.38-ish area. Well, there is a third bearish pattern out here, and that's called the Gartley sell. It's a 0.786 Gartley sell. That is the blue pattern that is on my screen out here. And that says that what we should see is a move down now to about the 139.10 level, which is what it hit earlier this morning, is your 0.618 retracement. What is interesting here about this currency pair is that in a daily chart, it's actually gotten down into the oversold condition. Now, the last time that it was down here, it was on February 4th. That's using a 14-period relative strength indicator out there. It's a great indicator tool for identifying overbought and oversold conditions. Now, it's just starting to get down there. But we have to be aware that it is down there. My thought on this at this stage, when I take a look at the candlesticks and I take a look at everything that is out here, a move sideways, maybe a bit of a bounce here, because that's really what the intraday 120-minute chart shows us. If we switch over to the 120-minute time frame out here, this made one of my favorite reversal patterns as it was moving lower. It's called the price relative strength divergent pattern. It was moving lower. It was doing it with less weakness out here, and it gave us a reversal signal. It's given us three reversal signals in essence. It gave us a key reversal session in bullish engulfing. That was at 11 o'clock this morning. It gave us a hammer candle. That was at 1 o'clock this afternoon, and then gave us another one at 3 o'clock, another hammer candle. So these lows are very important, which says that if we come in tomorrow and the euro is trading below that area, 138.96, well, then you go back to the daily chart, and that says instead of stopping at the 1.618 and the 1 to 1A to be equal CD to the downside, probably the 137 area comes sooner than later. And pretty good chance that it's going to go ahead and since they've all met up with regard to the direction. And that is the stock market. That is the S&P 500. That is the Euro-Japanese yen. They're probably all going to travel in the same limo, and they're going to travel further to the downside out here. A bounce from this sold level, though, should be anticipated. That's what really could take place tomorrow, and chances are, if in fact that occurs, that will be more of a bearish outcome, because it is likely going to be a bounce on light volume. And as we were talking with Kim in Denver out here, if you take a look at the ETF structure, the IWM, it did form a hammer candle today. That means it was off of its session lows. That is a bullish candle. It was down, though, with volume, 75 million versus 76 versus the key level, which is February 5th, which has 60 million shares. That does not mean that it can't bounce. That's why I was really asking Kim what type of trader from a time frame that he was looking at out here, because if it was real intraday, you'd really want to have a tight stop in here, and that would be inside the IWM. The VIX index moved higher today. It did not close above the 50-day exponential moving average, but it did what I think is the most bearish thing, which was not close at its session highs, which would have been 1377. If it had done that, then I would tell you that based on the Qs with that high volume day that we had today, with the IWM rejecting lows, that what the VIX would have had a one-day rate of change of 13-14%. And when you see those, it tells you that you're going to have a bounce usually within not usually, but like 80% of the time, within two trading sessions. It didn't do that. So the liquidity gauge here of the VIX, it's below the 50-day exponential moving average, but when and if it gets above that, and here that is only at 1389. Somebody might be telling you, hey, the VIX is only at 1389 or 1350 or $14. In relative terms, it's kind of low out there and it doesn't mean anything. Folks, that's all BS. That is all before Steve out there. Because when the VIX index trades above the 50-day exponential moving average, that is where the carnage is done inside of the marketplace out there. So that's really setting up the markets for what it is that we should be looking at. Again, it's been a privilege, as always, to be here with you. Do yourself a favor. Go to the homepage of TFNN.com. Click on my name, Steve Rhodes, out there. That'll take you. Then you can see the newsletter service of mine, Mastering Probability. For the last 10 months, we have been outperforming the S&P 500 by well over 100% out there. Really what I'm asking you to do for 30 days is not make an investment at all. Make an investment in yourself by simply test driving, mastering probability, 30-day unconditional money-back guarantee, and if you like it, it's going to cost you less than $5 a day and make you a ton. Folks, thanks so much. Have a terrific Thursday. Drive safe if you're driving. I look forward to seeing you soon. Take care now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.